candlesticks. So in this module, we're going to talk about candlesticks. You may have been noticing on your charts all these red or green blocks. What are they? What do they mean? Now, a candlestick is actually a form of visual data. What that means is it's showing you the price move or the price action in a simple candle. Now, a candle consists of two parts. You've got the main body, and then you've got to the upside a shadow, to the downside a shadow. Another word for shadow we can say is wicks. Okay? Now the candle shows you whether a price has increased in value or decreased in value at a given time frame. Now on your chart, you may have also noticed there's H1, D1, W1, etc. These are the different time frames. You've got H1, which is 1 hour, or you've got, for example, H4, which is 4 hour. You may have D1, which is daily, or W1, which is weekly. Now when you select a time frame, each candle represents a given time frame. For example, if we selected H4, the candles which we're seeing are each 4 hours worth of data, 4 hours worth of price moves. Now, if the candle is green, it's signifying that it's a bullish candle. Therefore, the candle is going up. Now, the main body will show us the open and the close. And the shadows will show us the highest point that the price got to or the lowest point that the price got to. So we said every candle represents a given time frame. For example, if we selected the H4 candle, what I want to do is I want to open up this one individual candle, which consists of 4 hours worth of data, into a chart so you can better understand how candles are formed. Now remember, if it's a bullish candle, it will be green. For example, on the chart, that means it opened low and closed high. So remember, the body shows you the open and the close. If it's a bearish candle, for example, all it means is it opened high and then it closed low. Let's go with a bearish candle so you can understand. So this is a 4 hour candle. Let's say it started at 1 p.m. The opening price was here, let's say 1.2020. Now remember, the shadows or the wicks shows us the highest point it got to within that time frame, or the lowest point it got to within that time frame. So we could say that the price started at 1 p.m, it opened, the candle started. Now as the price is moving, we could say it got this high at around 2:15, then it started to make its way down. By around 3 p.m, let's say it got this low. It got this low by around 3 p.m, let's say, like that. And then by 4 p.m, it came up again and it closed at that price. So as you can see, here's a H4 candle. We've opened it up and we're analyzing each hour. This is the move that it's been doing. And because of that, this is the shape that it's created. Once the H4, the 4 hours is finished, it closes its candle and the next candle begins. For you to get a slight better understanding of how candles are formed, you can click on the 1 minute chart. So look for M1, click on the 1 minute chart and have a look at the 1 minute candles forming in real time, and you'll get a better understanding on how candlesticks are formed. Hey guys, so we just saw a H4 candle and how we opened it up onto the chart and we saw each hour worth of moves put into one single candle. Now, Candles can be in all different shapes and sizes. They don't necessarily have to be that typical rectangle with the perfect shadows. So let's do another example of an irregular shaped candle, so we can go over it again and you can better understand how a candle is formed. So we're going to look at a H1, which means that candle represents 1 hour worth of price move, price action. Now let's make this an irregular shape. For example, let's give it a very thin body, a short lower shadow, and a very long upper shadow. Okay? Now remember, it's a 1 hour candle, so it's representing 1 hour worth of data. If we were to open up this candle and analyze that hour, this is how the chart may look when you open out the hour candle. For example, let's say we started the hour at 1 p.m. and it's a bullish candle, so the open is the bottom part of the body and the close is the top part of the body. What this represents is that hour. So the hour started at that price. It got this low. Let's say the market got that low, that was the lowest point in that hour. It got this high. Let's say the market went this high. Let's say within 30 minutes, for example. So we're halfway through now, and then in the last 15 minutes, let's say in the hour, it came back down, the market came back down, and it actually maybe went a bit sideways, and it closed at that price. So by 2 p.m, that candle has formed, and this is the shape you would see on the charts. Again, for candles, make sure you understand the candles inside out. Understand how the shapes are formed, and also understand what the shape is telling you. If you was to open up that individual candle, what sort of moves was it showing you that happened within that time frame? So we've seen candles come in all shapes and sizes, and it's important for us to understand which candle's pattern tells us what story. Now, the first candlestick pattern I'm going to explain is called a block candle. Now, a block candle is pretty self-explanatory. It looks like a block, it has a long body and very minimal to no shadow. Okay? If you see a candle which has a long body, very minimal to no shadow, what it's telling us is that it opened at a high price and it closed at a low price with very little pullback or retracement. It went straight from high to low or from low to high. What this shows is that there's a high level of momentum within that time frame. For example, let's say it's an hour candle. What it's telling us is that hour of time, the market went from this price directly to the low price with high momentum. It went in mostly one direction. And likewise, we could say the same for the other direction. If it's a bullish candle, it went from low to high with a lot of momentum. Now, the good thing about block candles is it shows us when there's high levels of momentum. And when there's high level of momentum, it typically means that the market will keep on going in that given direction. So if it's a bullish block candle, you may see the market continue on an upwards direction. If it's a bearish block candle, we may see the market continue on a downwards direction for the next couple of moves. So block candles show us when there's high levels of momentum. Now, the other candlestick patterns which we need to be familiar with are known as pivot candles. Now, pivot candles, as the name suggests, it indicates a pivot point in the market. For example, if we were in an upwards trend and we identified some pivot candles, the market would then use that to pivot and change its direction, therefore going in a downwards trend. Now it's important to be able to identify pivot candles and how they look like. Now there's many different types of pivot candles, however it's important to recognize the shape and don't be too caught up on sort of what we call them or the names that they're given. So I'm going to walk you through a few pivot candles examples so you can be able to identify them on the chart. The first pivot candle we're going to talk about is known as a doji candle. A doji candle. A doji candle, how you recognize a doji candle is it has very minimal to no body. For example, there's its body and there is its shadows. So that's a doji candle. Now doji candle can come in different variations. For example, it may have a longer lower shadow and a shorter upper shadow, or it may have a longer upper shadow and a shorter lower shadow. But the important thing to understand is because of its body, because it's showing a small body, what it's showing us is the open and close. It went high, it came back down, and it came back nearer to its opening price. So the amount of buyers and the amount of sellers in that time frame is almost equal. Therefore, the market could pivot into another direction. Another form of pivot candle we could call the hammer candle. A hammer candle, as the name suggests, has a similar shape to a hammer. You notice the body, almost a square-like shape, very minimal upper shadow and a long lower shadow. Again, it's a pivot candle, so if you identify this on the chart at key areas, it may indicate that the market is going to pivot. We also can see hammer candles in the inverse direction. For example, a long upper shadow, square body, and short lower shadow. Some people prefer to call this candle a shooting star candle, but like I said before, it's not too important what names you give the candles, but rather it's important to identify a candle and what it's going to do on the charts. For example, if you identified this shooting star candle before an uptrend, let's say we were going on an upwards trend, the market was pushing upwards, we noticed that there was a pivot candle, we could potentially look for the market pivoting and now going in a downwards trend. Now again, on the pivot candles, there's a third type of pivot candle which I'm going to introduce to you. Now this candle comes in pairs, so it's always need to look out for these two candles together side by side, and they act again as a pivot point. This is known as the engulfing candlestick pattern. Now the engulfing candle, what it means is, let's say we had an upwards trend again, and then we noticed that there was a candle like this, a bullish candle, followed by a bearish candle, which may have been half of the size of the previous candle. When you find this sort of pattern, this is an engulfing candlestick pattern. Notice how the bodies align. Notice how the bodies align, and they're always in pairs. When you notice this pattern, then it indicates a pivot point. Again, it could be, for example, the candle on the right is engulfing, or the candle on the left is engulfing. The important thing to look for is make sure that you notice the bodies are aligned, and also one candle is engulfing the other candle. Sometimes we may even find engulfing candles of similar length. For example, as so. Again, this is another form of engulfing candles which indicates a pivot point. So there we've spoken about candles, We've spoken about how candlesticks are formed, how we can read candles. Each candle is a given time frame, and we've also spoken about the different types of candlestick patterns: block candle, pivot candle, engulfing candle, etc. Now, candlesticks is a very important module which you need to make sure you understand inside out, okay? Because it gives you the basis of the charts. It's sort of like the backbone of the charts. You need to understand how the charts are moving, and this is known as price action. For example, if we add, let's look at the trends. Let's add it together. Remember, in a bullish trend, we said there's a thrust, reaction, thrust, reaction, thrust, reaction. When you identify a trend, for example, at the trend lines now, you can be looking for pivot candles. Or in the middle of a trend, you could be looking for block candles. That's indicating momentum. So now start adding up the previous modules together and looking for these clues in the charts. That's going to help you identify some moves in the market. Similarly, in a support or resistance, a sideways trend, for example, let's say we identified a sideways trend, we draw in a support and resistance. Again, at the key levels, you can identify candles, whether it's a pivot candle or whether it's a block candle. For example, when the resistance gets breached, you may have found a block candle closing above your resistance line. And also remember, when the resistance gets broken, it's then going to act as a future support.